All right, so are you ready to make a bloody fortune with the upcoming 2023 market crash? Probably not, right? You're probably scared. You're probably saying, oh my God, how do you make a fortune when everything's crashing? Well, that's what we're gonna cover. I'm gonna dive deep into it. So the first thing you gotta understand is the economic indicators are all pointing toward a crash in 2023. I don't care if it's the inverse relationships, I don't care if it's the debt cycles, I don't care what you look at. All of them point to the same exact place. And that is, the markets are going down. There's no way we're soft landing this thing. I say this all the time. I've got video after video after video that all show this. All the economists are saying the same thing too. The Ray Dalios, some of the smartest minds in finance and in Wall Street are saying the exact same thing I'm about to tell you. This plane is going down. And I'm not meaning that literally when we say a plane, but I mean this whole ship is sinking quick. So the whole thing you got to look at is if all the indicators, if all the cycles are pointing to the exact same place and that's down, well, let's figure out how to make a stinking killing in this. Is that something you want to know? Is that really something you want to know? I'm being serious here. Because some of you say, oh yeah, that's something I want to know. No. You got to commit to this. You got to prepare for this. You got to get ready for this. This isn't just something you say, oh yeah, that sounds cool, and I'm just going to keep doing what I'm doing. I'm not going to change anything. I'm just going to make a fortune because the market goes down. No, you know what? You are going to ride the roller coaster down if you don't make changes, if you don't get ready, if you don't plan for this. So let's move on. What I want you to do is I want you to learn about the specific industries that are likely to be hit the hardest, and I want you to know how to profit from them. I'm going to hit high-level stuff, real simple stuff. We're not going to get into options or derivatives or all this crazy stuff that sometimes I talk about. We're going to talk just high-level stuff. So if you're thinking about a recession, which is where we're headed, what industries are going to get hit the hardest? Well, if we just look at leading indicators, ones that are already starting to feel the pinch, it points to a couple different places. Number one, transportation. Because when everything slows down, which is what the Fed's trying to do, just so you know, the raising of the interest rates, the unwinding of the balance sheet, all the things that you hear the Fed say and you hear Jerome Powell say, there's going to be some pain. What does that mean? It means a slowdown. So when things slow down and people stop spending as much money, when people aren't buying as many goods and services because either one, they lost their job and can't afford them, or two, they're trying to preserve some of the money. They're not spending as much. We all have been there, or at least some of you have. Some of you are too young to really have ever felt the pain that comes along with a recession. So let's talk about transportation and logistics. I'm talking about trucking companies. I'm talking about some of the railroads. They all slow down. When there's not as many goods and services moving about, that industry slows down. They lay people off and they feel the pinch. They already are. We just came out of the holiday season though, because this is January 2023. So the pinch hasn't yet set in. But you know what other industry has? Technology. And the reason technology is getting hit hard, it's not because technology is doing bad. It's because technology was doing so good. During the pandemic, companies like Netflix, like Amazon, I mean, I could keep going on. They all skyrocketed. Look at the charts. Their stocks went to the moon, literally. It was like a straight line up. Why? Because everybody was locked up at home. They were watching TV. They were watching Netflix. They were buying goods and services online, Amazon. They were shipping them direct to their house. And here's the thing. A lot of people now are going back to the old ways of doing things because they missed going to the grocery store. They missed going out and shopping. They missed going to the department stores. They got sick of buying everything online because they wanted the experience. They wanted the relationship. They wanted to get back out there. So some of those companies are now faced with a decision where now they're coming off of the highs. They're sinking fast, and now they got to cut things. They got to cut people. They got to lay people off, and you're seeing it. You're seeing it at all the techs. All the tech stocks are starting to feel the pinch. They're going down, but there's a lot further. I want you to look at the early 2000s and the dot-com crash to really see where we're going. So if you're really looking at specific industries that are likely to get hit the hardest, I'd start there. Technology companies, ones that are going to feel a pinch when people aren't buying as much stuff, when people aren't shipping as much stuff, when we talk about logistics. Those are two great industries to start really honing in on. And there's lots more. Let's move on. We got to look at and discover the investment strategies that have been proven to be successful during past crashes. Look, we can learn so much from history. So during the Great Recession or during the dot-com crash, what would have been some strategies that would have paid off really well? One of the strategies, I can tell you in every recessionary period that really paid off, was right now, right before it hits, planning, getting positioned to win during this. And getting positioned means getting in places where your money's liquid and safe. They call it the flight to safety, but too many people take that flight to safety when it's too late, after they've already lost a bunch. Right now, when most of you are only down about maybe 20, 25%, depending on what you're invested in, that's not bad, because it only takes, if you're down 20, it takes 25% to get back the 20 you lost. That's not terrible. So this should be the flight to safety. You got to move to a preservation of principal model. And what does that mean? Some of you, the simplest path is just move to cash. But cash, remember, depending on how long it sits in cash, you're losing to inflation. So I try to hedge that a little bit, and I use things like treasury bonds, because I know how treasury bonds work. You're going to get paid a yield, and they're guaranteed by the full faith and credit of the U.S. government. I'm not making a recommendation or a suggestion to you. I'm just telling you the flight to safety could be treasury bonds, because they're a safe place. All money flows that way when things go south. Now, I know some of you are thinking gold, but gold is a good store of wealth, but it is not always the best place when you're looking for immediate liquidity. How about whole life insurance, or specially designed and engineered whole life, ones that have high liquidity, high early cash value policy designs like what we build for the infinite banking concept? That's a great flight to safety. So there's a couple different places, not a whole bunch of places where we can move money to be safe. But what I need you to be thinking about is, I don't need you to be thinking about right now making a ton of money. I need you to be thinking about preserving what you have, growing it maybe just a little bit to hedge the inflation numbers, which are coming down, and be ready to strike. Be ready to take advantage of those industries that are going to get hit hard, like logistics, okay, like transportation, like technology companies. That is what we need to do. That is a proven strategy. Now, if you're a sophisticated investor, you can start looking at derivatives. You can start looking at option strategies. Plenty of those that would capture the downside. But we haven't yet moved to that. We haven't moved. A lot of people would say that we're still a little bit bullish, but there's a lot of bear feelings about this. The market doesn't know what way it wants to go. And when the market's undecided, it's going up, it's going down, it's going up, it's going down, we kind of have to wait to determine a true bear run. And that's when you can use option strategies to really capture that downside gain. You can make money when the market goes down with things like puts. Again, not making a recommendation or suggestion. I'm just talking high level. But here's the thing. Moving on, you got to learn how to identify and take advantage of these buying opportunities. In the midst of the market turmoil, that's a hard thing to do. There's not a lot of people that when everything's falling apart are like, oh my God, I can't wait for this. I can't wait to buy this. And I can't wait to buy that company. And I can't wait to put my money in this. At the time when everything's falling apart, when you're right in the midst of that market turmoil, the thing that you're going to want to do is you're going to want to pull back. That's when you need to push in. That's what successful investors do. That's what people that make multiple, like millions of dollars in market crashes. So I already told you, right? You got to look at successful, proven strategies during past crashes. Well, one of them is you gotta get ready for this. You got to get ready to push the chips in when everybody else is pulling the chips out. Warren Buffett says it best. He says, when others are fearful, you need to be greedy. Right now, there's still a lot of greed. So when others are greedy, you need to be fearful. That's right now. Flight to safety. Get safe. Get that money in a preservation mode. When everybody else turns to being fearful, that's when you get greedy. That's when you push in. That's when you take advantage of things. And really, there's no real science. I mean, you should only invest in things you know, like, and understand. But the one thing I do want to say is when this whole turmoil takes place and when you're seeing it in the news and it's all around you, you're going to be scared, but just know that's the point when you strike. That's when you start buying in. If you don't like that, if maybe that's a little bit too risky or you're just too nervous to do it, then dollar cost average in. Little bits on a systematic basis. Just start buying in now. When the markets are going down, just a little bit now, a little bit next week, next month, and then just keep buying in. Dollar cost average into things that you know, like, and understand. Pick industries that you know, like, and understand. If you know technology, great. Find the companies that you know, like, and understand and that you love and that you use their products and that you believe in the management of the company. And then look at their fundamentals. Look at their prospectus. Read as much as you can about those companies. See, this is how you take advantage of an opportunity. And this is how you feel confident about that opportunity in the midst of everything falling apart. And the final thing I want to talk about is I want you to find out how to protect your existing investments. I mentioned this earlier, but you really need to focus in on this. You need to know how to protect those the existing investments you have. I don't care if it's a 401k, an IRA, maybe just a brokerage account, whatever investments you have now, how do you protect them? How do you minimize your losses during a crash? Well, it's super easy. And right behind me, I've got a video that I did for YouTube before, and this is treasury bonds. This is a great way to minimize losses, is to move into things like this, that you understand how they work. When interest rates go up, the price goes down. Buy low. Interest rates have been going up, haven't they? Yes. So doesn't that mean that presents a buying opportunity? See, on the flip side, though, once the prices start going, or interest rates start going down, when we're in the midst of this market turmoil, the Fed always drops interest rates, the price of the bonds goes up. So you can play into that. How else do you protect it? You flight to safety. In your 401k, call your advisor, call the person that handles your 401k and say, hey, listen, I'm worried about any losses. My risk is very low. I can't lose money. Where do I move my money right now? That's what you do. You start looking at those places to minimize your losses during the crash so that you're ready to move in. And the sixth thing, the final thing, is get a clear plan. A clear plan for positioning yourself to make a fortune during the 2023 crash. So let me just repeat these all really quick. So the first thing you need to do is understand the economic indicators that are pointing toward the crash, right? You need to look at the economic cycles. Follow Ray Dalio. Watch some of his videos. Understand why we're going into a recession. One of the biggest things is, number one, the yield curve inversion. It already happened. That's never been wrong. Number two, learn about specific industries that are likely to hit the hardest. I mentioned logistics and transportation and technology. Find the ones and then figure out how you're going to profit from them when they do get hit. Discover the investment strategies that have been proven to be successful during past crashes. The fourth thing is learn how to identify and take advantage of these buying opportunities when you're in the midst of turmoil, when you're in the midst of the crash, when fear is all around you. That's when you want to strike. And then the other thing I said is you got to find out how to protect your existing investments and minimize the losses, because you don't want to ride the roller coaster down. Then you got nothing to invest if you've already lost. So get a clear plan. Position yourself to make a fortune during the 2023 crash. I hope you enjoyed this, folks. I hope you take and apply this knowledge. And since you like this video, well, then why don't you check this one out? What is the most important factor for wealth creation? Thanks for joining me today. We'll see you on the next one.